You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday. Members only workshop tonight. If you've been on the trial and you want to be in the workshop tonight, well, you got to be a member because it's the members only workshop. Happens every Thursday night at 8 p.m. Eastern for a long time, since, 2008. Okay, get that out of the way. Thanks for joining us, wherever you are. Wherever you are, we're always glad to have you right here, right now. You are listening to the second live broadcast of the day. First live broadcast. Now that's private. Members only and those taking the 1-week free trial. If you have not yet taken your 1-week free trial, you can do so right now by going to mytradingiq.com. At the very top of the page, there's a link that says 5-day free trial, no credit card required. Click the link, fill out the registration form properly. It's an automatic process, so if you don't fill it out right, it'll get rejected. We won't see it. You won't get a trial. So, take the few minutes required to just make sure you get it right, okay, before you hit submit. It's pretty simple. Then what will happen is typically same day, we'll get your desktop set up, get your indicators indicating, and then your trial will start the following day. Now, since today's Wednesday, that would be tomorrow, Thursday. So, you might think, well, gee, I'll only get 2 days. Not true. You see, weekends don't count against you. Even though there are some markets open, Forex, crypto, over the weekend, okay? So really what happens is if you sign up today and your trial starts tomorrow, you'll get 2 days this week. The weekend won't count against you. And then you'll get 3 days next week. 5 consecutive trading days, even if it stretches over a weekend. Okay? Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, at 12 noon Eastern. Now, whereas the first broadcast of the day is private, the second broadcast, this one, is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. There's a couple different ways you can join the afternoon broadcast live. Best way, you only have to do this once. Go to mytradingiq.com and scroll down to where it says afternoon broadcast. Click that link, complete that 30-second registration form, and you're done. What will happen going forward every trading day, you'll get an email about an hour before the broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email. It will automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. And the other way I'm about to give you, there's about a 10 to 15 second lag, and I'm not able to monitor that question box until Michael joins us at about 12:45, 12:50. So again, that's the best way, but there's going to be days when you're out of the office, away from the desktop, and you still want to join live. And there'll be days when you're busy and can't join live, but you want to get caught up later. You can do both via our YouTube channel, which is very easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. If you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more, and literally see how we've evolved over the years. Now, obviously, you're not going to watch them all, but I encourage you to scroll back and just pick some days at random. Watch a little bit, fast forward a little bit, go to another day, repeat the process, go to another day, repeat the process. It really is a great way to find out who we are, and you'll discover the thread of continuity that's woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. So we'll open with our daily devotional. We begin a new topic today. Then a word of prayer. Then we'll get into the markets. Got a couple articles to share with you. Then we'll get into the charts. And then about 12:45, 12:50, Michael will join us, give us a recap of the live trading room. Then we'll go live on the TradingView platform for 30 minutes, do some live trading. And then I'll wrap it up with our good word for the day. Now, the topic of our new devotional series for the next week is overcoming spiritual warfare. And some people shook their head and goes, well, what's that? Well, you're going to find out over the coming days. Now, really, it's about living changed. We all know that when we chose to give our life to Christ, to get saved, I'm doing air quotes here, it's popular terminology for it. The scripture promises that we will become a new creation, right? It says we'll have the mind of Christ. But yet for many of us, even though we make that surrender, make that allegiance, our lives don't change. Why is that? Because we have to learn to live the changed life. And the thing that prevents us is spiritual warfare. There is spiritual warfare taking place right now in the heavenly places for your soul, saved or unsaved. Our scripture is Genesis 3, verses 1 through 7. I'm going to share with you from the Message translation. The serpent was clever, more clever than any wild animal God had made. Now, obviously he was clever because he spoke to the woman. I don't think all the animals could talk back then. He spoke to the woman. Do I understand that God told you not to eat from any tree in the garden? The woman said to the serpent, not at all. We can eat from the trees in the garden. It's only about the tree in the middle of the garden that God said, don't eat from it. Don't even touch it, or you'll die. The serpent told the woman, you won't die. God knows that the moment you eat from that tree, you'll see what's really going on. You'll be just like God, knowing everything, ranging all the way from good to evil. When the woman saw that the tree looked like good eating and realized what she would get out of it, she would know everything. She took and ate the fruit and then gave some to her husband, and he ate. Immediately, two of them did see what's really going on. They saw themselves naked. They sewed fig leaves together as makeshift clothes for themselves. Now, later on, this serpent does say, told you you wouldn't die. Really? When's the last time you saw Eve? No, I mean, seriously, have you seen her at the mall? At the ice cream shop? No, because she died. She's buried in the ground, wherever they buried her, when she died. God didn't say you'll die instantaneously. He just said, eat from that tree and you'll die. Not only will you die, he didn't go on to say this, but this is how it played out. All humanity will die. You see, that wasn't God's original plan. Remember, God's desire is that no man should perish, but we're getting way ahead of ourselves. So let's talk for a minute about the enemy who never changes. Our enemy, Satan, he's not that creative. He's got some great tools, from alcohol to drugs to pornography, things that have been around since literally the garden. He cannot create new ways to attack you. He uses the same weapons to fight against us every time. While Satan's lies feel personal and direct, nothing he says is original. His goal is to challenge you to doubt God and can cause you to question your identity. This attack can seem like a twofold attack, but really causing you to question your identity and getting you to doubt God. It's two sides of the same coin. While these lies feel like a new attack in your life, they're simply the same old lies he told Adam and Eve in the Garden of Eden. Did God really say that it's a sin? Is that really as bad as God says it is? He aimed to cause doubt with his lies and divide Adam and Eve from God's truth. Satan used this same attack, questioning Jesus' authority and his identity by challenging him when he was alone. If you are the Son of God, tell these stones to become bread. Now, Jesus had been fasting for quite some time. The lies he told Jesus are similar to the lies he tells you. Are you really God's masterpiece? Are you really God's beloved? Are you really redeemed? If Satan can make you question who you are, then you may start to doubt whose you are. Instead of focusing on what God says about you, you'll begin chasing what friends think of you, who social media says you are, and what others say about you. When the enemy questions your identity, your answer is crucial. Disagree with the lies and fill yourself with God's truth. While Satan's lies are unoriginal, Hebrews 4:12 shows us God's word, on the other hand, is alive and active, sharper than any double-edged sword. So when you feel doubt creeping in, challenging your identity in Christ, remind yourself who God says you are. You can combat Satan's lies with God's truth. But to do that, you must know God's truth. Today, choose to fight against the lies of the enemy by creating a firm foundation in truth by meditating on God's word. Friend, it's time to sharpen your sword. Join me in a word of prayer. Heavenly Father, as we come before you today, we reflect on this passage we just read where humanity first succumbed to temptation and disobedience. Lord, we acknowledge our own vulnerability to the deceitfulness of sin and our need for your guidance and strength. Forgive us, Lord, for the times we have chosen to follow our own desires rather than your will. We confess our tendency to be swayed by the lies of the enemy and to stray from the path of righteousness. Lord, we pray for your wisdom and discernment to recognize the tactics of the enemy and to resist temptation. Help us to rely on your word as our source of truth and to trust in your faithfulness to deliver us from evil. Thank you, Lord, for your grace and mercy, which are always available to us when we turn to you in repentance. Restore to us the joy of your salvation and renew a right spirit within us. As we reflect on the consequences of sin, may we also be reminded of your boundless love and mercy. Thank you for sending your Son, Jesus Christ, to redeem us from the power of sin and death. And help us, Lord, each day to walk in obedience to your commands and to live lives that bring honor and glory to your name. May we be vigilant in guarding our hearts and minds against the schemes of the enemy. And may we find strength and refuge in you alone. It's It's in Jesus' name we believe and pray. And everybody said, amen. Amen. And happy Thursday. Let me give you the numbers from around the world. And then I'll explain why the numbers are where they are. All right, starting in the U.S. Hold on to your hats. And let me refresh it one more time. Again, these are the cash markets or the indices. Okay, this is the futures market. The Dow is down 486 points. That's 1.25%. NASDAQ is down 203. That's 1.25%. S&P 500 is down 45 points, almost 1%. And the Russell 2000, our man in the street, down 24 points or 1.25%. In the commodity basket, crude oil is down 23 cents, trading 82.58 last. Gold finally catching a break, up $5.30, trading 23.43.70 last. Silver, basically unchanged on the session. In the Asian markets at the close, Nikkei down 831 points, over 2%. Shanghai up 8 points. The Hang Seng up 83. And in the European markets at the close, FTSE up 38. The DAX up 171. I'm sorry, down 171, which is almost 1%. And the CAC down 76, almost 1%. So we had a mixed day in Asia, mixed day in the UK, but it's definitely a red radio Thursday here in the US of A. Now, while we had some mixed markets there, obviously we're leaning hard to the red side, right? Why is that? Well, we could spend the whole day talking about the variety of reasons. But let's start with what happened this morning. The GDP numbers came out, and that's a big one. The U.S. economy grew at its slowest pace in nearly 2 years last quarter as inflation topped Wall Street estimates. The Bureau of Economic Analysis advanced estimate of first quarter U.S. gross domestic product showed the economy grew at an annualized pace of 1.6% during the period, missing the 2.5% growth expected by economists surveyed by Bloomberg. The reading came in significantly lower than the fourth quarter GDP, which was revised up to 3.4%. Meanwhile, the core personal consumption expenditures index, which excludes food and energy, because none of us, use that. Now, this is the expenditure index. Grew by 3.7% in the first quarter, above estimates for 3.4%, and significantly higher than the 2% gain seen in the prior quarter. Now, the data released today comes as investors try to gauge when the Federal Reserve will start cutting interest rates, and if the central bank can achieve a soft landing where inflation comes down to its 2% target without a significant economic downturn. I can answer that question for them. No, it's not possible. You're using the wrong remedy for the illness. You don't heal a fragile economy with higher interest rates if you want a soft landing. Now, this report that came out today pours cold water on the misleading narratives of a reaccelerating economy. Chief economist Gregory Dacko wrote in a research note following the print this morning, as we enter the spring, the underlying growth mix continues to signal robust momentum, but demand growth is gently cooling, leading to an easing of inflationary pressures. I think what he's trying to say, people have run out of money. They've maxed out their credit cards buying groceries and paying their rent. And now the poo-poo is about to hit the fan. That's my take. Meta reported its first quarter earnings on Wednesday, and while it beat analyst expectations on the top and bottom lines, a disappointing Q2 forecast sent shares of the social media giant plummeting as much as 14% in early trading this morning. Meta says it will see second quarter revenue between 36 and 39 billion, falling short of midpoint estimates of 38.24 billion. In addition to the downbeat Q2 forecast, Meta CFO Susan Li raised the company's full year total expense estimate from a range between 94 billion and 99 billion to between 96 billion and 99 billion due to higher infrastructure and legal costs. So the blue bloods, the plutocrats, they're finally starting to feel the pinch of this thing us commoners have so far only suffered from. The beast they call inflation. Okay, Logic 247, our 24/7 around-the-clock E-mini alert service. Not just E-minis, but also crude, gold, silver, euro bonds. We're in week 299. Next week will be week 300. That's amazing. Time flies. Over the last 299 weeks, we've issued over 16,500 individual handcrafted alerts. In fact, we're closing in on 16,600. And what we've averaged over those 299 weeks and those 16,000 plus alerts is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, this recap was done this morning at 6:45 a.m. Eastern. That was before the GDP numbers came out. I've not issued any additional alerts yet today. So when Valerie did the recap this morning, since the markets opened Sunday night at 6 p.m. Eastern, we had issued a total of 41 alerts. One never triggered. Still waiting on the outcome of 14. 26 actionable alerts, of which 3 or 12% would have been stopped out based on market structure and that very simple process we teach all of our passport holders. So is it the best week ever? No. Is it a great week? It is in my book. Now, the logic alerts have an entry price, an initial target designed to help you get your goal for the day. And then there'll be additional targets. Those additional targets come from me looking left for you. The spot potential are previous swing highs and swing lows, which can become current potential resistance or support. The purpose of the alerts is not so you can just trade them and not have to worry about learning how to trade. They are part of the learning process. If you're serious about learning how to trade, I'm going to tell you what you should do. Every time there's a logic alert, whether you trade that market or not, you should go to the 30-minute chart. That's where all alerts are created. And that entry price, you should draw a horizontal line on your page at the entry price. And then another one at the initial target. That little area right there, that's your goal for the day. But then if there's a second target, okay, then draw a horizontal line at that price. If there's a third target, draw a horizontal line at that price. If there's a fourth target, a fifth, however many, draw a horizontal line on your 30-minute chart. Repeat that process again and again, day after day, until pretty soon you're able to see the windows of opportunity yourself. You're able to see the obstacles yourself. If your goal is to trade for a living, it will never, ever happen as long as you're waiting on somebody else to tell you when to get in and when to get out. Spend your money on all the holy grails in the world, but there's only one holy grail, and that's learning how to trade. And once you learn how to trade, guess what? Nobody can ever take it away from you. It's a true story. Now, long before we had Logic 247, it would be more like 700 weeks ago, I guess, we had our original alert service, the concierge trade alerts. As soon as I find them, which I just did, show them to you. Now, unlike the logic alerts, which come out around the clock, 24/7 as opportunity presents itself, the CTAs are published as a static report shortly after the Globex Open each evening. Now, Globex opens at 6 p.m. Eastern. I typically have them out by 6:10, 6:15. Last night, I didn't get them out until 8:05. Now, when this report comes out, first thing you want to do, go to your 30-minute chart of whatever markets you actually trade and make a note where price was at this time on that 30-minute chart. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. BBC simply stands for bull, bear, cross. It's the green line you'll see on all my charts. If price gets above the green line, then we're bullish and anticipate higher prices. If price gets below the green line, then we're bearish and anticipate lower prices. Always relative to whatever time frame you've applied the BBC. For the purpose of the alerts, it's always the 30-minute chart. As I explained on the logic alerts, I look left for you. But remember, you're learning how to trade. So your next step up the ladder is the CTAs, the concierge trade alerts. Here, you get to look left yourself to spot the potential obstacles that I was doing for you in Logic 247. And you're learning how price behaves at a weekly trading zone. I can't stress the importance of that enough because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. If price is above the 30-minute BBC, it's trying to get to the weekly zone above. If price is below the 30-minute BBC, it's trying to get to the weekly zone below. Published the zone since December 14th of 2009. This December is going to make 15 years. They come out Monday morning at 6:15 a.m. Eastern. For our members and trial members, once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. Other than that, just resist the urge to complicate things. As long as you know which way the wind is blowing, it's pretty simple to reach your goal. Okay. Okay. Here we are at the daily chart. And here is where we failed to connect with the BBC. A couple of illogical things have happened here. Back from the October 27th low to the April 1st high. Okay. It was November 2nd that we closed above the daily BBC. Now, the BBC is the BBC. I call it the daily BBC because I'm applying it here to a daily chart. 5-minute BBC would simply be the BBC applied to a 5-minute chart. Or a 30-minute chart, or a tick chart, or a range chart. Get it? Okay. So we made a clean break because the following day we opened and closed above the BBC. But not so after this April Fool's high, all-time historic high. We closed below, which was the first time since November 1st. Closed below, then we closed above. Then below, and then right at it. And then we caught a drop down to the 38% fib extension. We sailed through basically the 24% fib retracement. Remember that these long lines are the fib retracements from the low to the high. Those are the retracements. Fib extensions, it's a different story altogether. But it's all based on the same 15th, 14th century math. It is, now price came down and got below the step line. See, once the step line crosses from the left side of red and falling to the right side, it tells us to expect a pullback to the BC. But we didn't quite make it. Now, price came down through the step line. It got to red and falling, and as I mentioned yesterday, once red and falling gets directly below price, it becomes potential support. And it was. See how price bounced right back up to the step line? So we got a market looking for direction. There's lots of indecision. Just remember that the institutional traders look at daily, weekly, and monthly charts the way you and I. 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. They have accounts in the hundreds of millions, billions, some even trillions of dollars. Trade in incredible size. They move price. So whatever you trade, maybe it's a different futures market, maybe it's an individual stock, maybe it's crypto, maybe it's Forex, maybe it's ETF. If you'll learn to spend 2 minutes with the daily chart of whatever it is you trade, you're literally looking over the shoulder of the deep pockets that move price. Now that GDP number was part of this drop, okay? and the fumble by another of the Magnificent Seven. But the technical support comes in at red and falling, has now pushed us back up to the step line and to the 24% fib retracement. So, what are we up against? Price has to overcome the 24% fib retracement, and then it has to take out this high to touch the BBC. Or price has to break below red and falling, take out the low of April 19th, and that would take us down into the area of the 38% fib retracement. Could we just consolidate sideways? Yeah. And over time, would it eventually look like price touched the BBC? Yeah. But we know live in real time, it didn't. See, anybody can be a genius with a historical chart. This is a live chart, okay? There's no denying that gap right there. So, what I said the last Friday or Monday, one of two things are going to happen. We're going to actually touch the BBC, or we're going to break the low of, I believe it was last Friday. Friday, Monday, Tuesday, Wednesday, Thursday. Yep, that's the deal. All right, as I said, all alerts are created on the 30-minute chart. This was the opening candle last night. Price pulled up to the BBC, pulled back holds more often than not, and it sent price down to the target, through the zone, and we found support here. If you go look left, you'll find it. Support always sends the market looking for resistance. It's at the 30-minute BBC. The logical thing to happen is for price to now drop. But you've got an obstacle here. Because the step line is directly below price, that's potential support. Red and falling because it's directly below price, potential support. Just as we saw in the daily chart, right? Price came right down to red and falling because it was directly below, and that support's in it, rocketing higher. We have the same scenario here on the 30-minute chart. There was never any reason to consider trading for the long target because price stayed below the BBC. Or at it, we never had price pull away. And we would have had to overcome this obstacle before we actually considered getting long up around 5102 up to 5109, 7 points. Only takes 2 points to get your goal for the day. Here's where we opened last night. We stayed below the BBC the whole night. Down we came, hit the target, consolidated. Okay. Now this target, okay, this is Thursday, Wednesday, Tuesday. See where that came from, right? So price consolidated there. And then it dropped all the way to the weekly zone below. That's when the news came out. Once it hit the weekly zone, it consolidated. That's what happens 70% of the time. Like here. 20% of the time, you'll get rejection. 10% of the time, the slice. So you'll notice that all the way down, you had price, step line, red and falling. What's changed? The step line has crossed red and falling. So price is now attempting to get its way back to the BBC, which we expect to be resistance until proven otherwise. If it is the resistance we expect, then we will get another leg to the downside. All right, Russell. Here's where we opened last night. Actually above the BBC. So we got a leg, enough to get your goal for the day. A retracement, pullback held. We hit the zone. Not the zone, I'm sorry, the target. Spiked it, pulled back to the BBC. See, resistance will always send the market looking for support, which will send the market looking for resistance. Now today's high, you look at the horizontal line of my cursor, today's high is yesterday's high? That would be Wednesday. It's Tuesday's high. Today's high is Tuesday's high. Now, you're never going to see that on a range chart. Okay? This is why it's so important that you learn to use multiple time frames. So when we hit Tuesday's high, and that news came out, price plummeted right down to this zone. We even dropped below this zone, and buyers came in just above this low that was put in on Monday. They bid it back up to the zone at 83.84. The step line has crossed, so price will attempt to get to the BBC. And looking left, there are no obstacles in its path. All these highs back here, they don't count. They've already been overcome by that move right there. In Q, here's where we opened last night. Dropped to the BBC. Whenever price drops to the weekly trading zone, we expect it to be support until proven otherwise. When the market finds support, it will go look for resistance. Resistance will send it looking for support. And right here, the short target is this bullish cross. Whenever a bullish cross leads to an extended move, the first time price revisits that area will almost always be support. Crude. Okay, Michael should be here any moment. Let's see if he's in the wings. Nope, not yet. All right, so we'll keep going. Crude open right at the weekly zone. Got above the BBC, red and falling. You can see turn to blue and climbing. And then up we went. This one candle here. Choose one. Opened at 82.96 and ran up $180 per contract traded. Now, if you stayed with it, it went even further. But the market found resistance. And so it went looking for support. Whenever price drops to a zone, we expect support to open otherwise. Support sent us all the way up to the zone, to the target. That resistance sent us looking for support, which we found at the zone. We caught a bounce into resistance, and that took us all the way down to the short target and below. All right, he's here.
I'm here. All right. Let's get this going on this side. Here we go.
Looks
Ready
good.
to roll. Good. All right. Good afternoon, everyone. Today is Thursday. Partners meet tonight, everyone. Today is Thursday, the 25th day of April. Can you believe that? It's 25th day of April already. Now, if you've not taken a free trial with us and you want to, go here to mytradingiq.com. Right here, sign up for your free 5-day training, and now 9:15 to 11:30. When you click on that, you're going to be brought to this registration page. I believe this is right one. Yeah, this registration. No, not this one. This is cryptocurrency. You're brought to this registration page. All right, we're on this one. All the way ask for your name, your email, your phone. We ask for even less on the other one. Fill out these drop downs right here. And if you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. Okay. Okay. So that is how you take the free trial. Now, once you've taken the free trial, you get access to all the indicators. And what we want to do is get you set up so that you have the indicator running on your charts. Running on your charts like this when you begin the trial. It's a really simple process, really, to get it all running on your charts. You just got to follow the directions that are out here. If you go to mytradingiq.com, click on trading platforms. There are instructions for all the trading platforms right here that we cover. And if you follow those instructions, you get the stuff basically set up. And if you have any trouble after that, we're just a phone call or an email away, or a text message in my case. All right, so the recap of today. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. This morning we made 58 ticks on the NQ, 42 ticks on the Russell. Now the Russell was not just that, it was a Russell and the YM combination. We made 33 on the YM and 9 on the Russell. Okay, and so I could spread this out a little bit and separate those two right in there. I could do that. And we didn't do anything with crude or gold. And on the EST, we made 2 ticks. That puts us at 525 on the morning session. So today it took 10 minutes and 6 trades to get to the goal for the day. At that point, we're up $2,320. So we took a total of 22 trades. So on a month now, we're up $9,407 over 19 business days, averaging $495 per contract per business day. On the year, we're at $32,397, averaging $410 per morning session. Now, if you were to quit trading when you get your goal for the day and you were to add 1 contract per month, starting this year, if you did that, so far this year, you would have only had to work 30.36 hours, and you would have averaged at this point $906 an hour. You'd be on your 4th contract right now. You'd be adding a 5th contract next month, right? Because this month you had to make $8,000, $2,000 per contract. You had to make $8,000 quitting when you got your goal for the day. And so far we're at 10,980 if you had 4 contracts on. I have 16 contracts on, so I'm at 43,920. And that's just about right. I have 4 times as many contracts, and it's just about 4 times as much money. Should be. Anyway, should be exactly 4 times as much money. Anyway, the same 30.36 hours though. All right, and doing that with 16 contracts on, we're averaging $5,359 per hour. That's why when I make meetings with people and they don't show up, it's $5,359 per hour. Break that down to the minutes. Anyway, that's in here and there. I'm just fussing. Let's get into the actual trades. Okay. Get into the actual trades right here. This is the YM, so we're going to hit Alt and scroll back to the beginning. Hit Alt and scroll back to the beginning. Here we are. All right, all the way back to the beginning. So on the YM, our first trade here on the YM was a stop out. We're minus 10 ticks on that one. The next trade on the YM was right over here. We ended up with plus 30 ticks on that. That goes to plus 20. The next trade was right here. We got 10 more to get us plus 30. Then 2 more to get us plus 32. And then 1 more to get us plus 33. And that is where we started the lesson plan. And I didn't trade much more. I think I only did the NQ. But if you go through here, you will see again and again where price has pulled back and just hit the ribbon when the other bands are spread and give us a blue arrow. So that was an okay one to take. That would have been okay. It was kind of flat here, but if you did take it, it would have stopped you out. You'd gotten some profit on that. You would have stopped out minus 10 on that. Would have gotten it back there. Would have stopped out again. No, actually, wouldn't have taken this because I had to put in a higher swing. So we'd gotten some profit on that and not taken that. And then we get into the break. There was a nice trade right here. This was going right into the weekly trading zone, which I don't recommend. This would have been a stop out right there, minus 10 ticks. Again, we went right into the weekly trading zone, which I don't recommend. This would have given you a good profit. And that's where we ended it with the YM this morning. All right, so we ended with plus 33 ticks on the YM. those last 3 trades, we had a plus, went from 20 to 30, so we had a plus 10, then we had a plus 2, then we had a plus 1. So that's how the last 3 trades ended up. On the Russell, we were back and forth a little bit on the Russell today too. We started, let me do the alt back thing again. We started out here. Here with a break even on the Russell right here, a little bit in the pre-market. And then we didn't trade it again. There's some nice blue arrows through there, but we didn't trade it again until all the way over here. And that one on the Russell, we picked up 9 ticks right there. Then we had another break even, and then we stopped out. That put us at -1. And then we had a plus 10 right there that put us back up at plus 9. And that is where we ended it on the morning session. Okay. There was one more nice blue arrow trade right here, and one more nice blue arrow trade. Actually, that wasn't really nice, but it was good enough to get the stop to break even. You have to go 4 ticks in profit to get the stop to break even. So that was another blue arrow trade right there. This one in here would have been a valid trade, and it would have stopped you out. I was doing the lesson plan at this point, so I wasn't really paying much attention. This was a blue arrow right here in the middle of these no trade zones. You know, the way that I've been getting slippage, it probably would have stopped me out to the tick. If it didn't stop you out to the tick, you would have gotten a good gain on it. But for me, it would have stopped me out to the tick. And that was it for the Russell today. Okay, and now we get to the ES. We only had a couple of trades on the ES today. Look at all those blue arrows right there. I feel like that happened to me once on the ES, or maybe it was the NQ that happened to me on. The ES, we don't have to use the button because we don't have that much to see. Here we go. Right here was our first trade. And we got 2 ticks profit on that one and a break even on that one. And that was all that we did with the ES. All right, that's all that we did. Right here, we had a nice leg up on that blue arrow. This one here would have stopped you out. And these 3 right here would have been combined. This would have been, the one trade would have been this one right here. Okay, and with the 10-tick stop, you would have stayed in it the whole time and managed to get some profit out of the profit. The first goal would have been the swing high right here. 62. Let me put the lines on and see. Ooh, target line. It's on chart. There it is. Yeah, so the swing high was right here. That's what we would have been going for the first target right there. And then you would have been looking at all this right through here, where the outer band is spread and it's blue. It's going up and it's blue. I'd have been looking for opportunity right in there. Anyway, that was the ES today. All right. So let me get out the question box. I don't have the question box open. Open that up. Okay, and let me put on the YouTube too, since I should put that on. Okay, it's loading up. Here it is. Click on. Oh, come on, man. Click on the live. There. Questions coming in there too, if there are any. Okay, so there were some questions coming in there, and questions more than statements more than questions, it looks like. Okay, Dwayne's talking to that person. All right, so we'll get into the NQ now. This is the NQ, but I'm going to go back again on the NQ. And we're almost there. All right, so here we are on the NQ now. All right, so our very first trade on the NQ was right here, and we picked up 4 ticks profit on that one. And this one, I don't know why I have a green on that. I think that's probably supposed to be a yellow, I think. We had a break even in there, and then we had a blue here. Now I think I got it from right here or something like that. I got 30 ticks profit on that, and I went to 34. I know it doesn't look like 30 ticks right there, but I got 30 ticks profit on that. It went to 34. And then over here, I stopped out, went back down to 14. Then I picked up 4 ticks. This is the one I was talking about. I had 3 in a row. I was talking about just like on the EST a minute ago. On this one, I picked the 4 ticks there. Got me to 18. Then 30 ticks on this. That got me to 48. And I stopped out on the next one, wherever the next one is. Got a break even and a break even. I picked up something here that I did not write down. And then I got to stop out. So it brought me down to 28. And then somewhere, it was during the lesson plan here, I got another 30 tick gain right there. It brought me back up to 58. And I think I actually got 2 more 30 tick gains that I didn't write down. But anyway, that was where it was right there. There was a nice trade right here also. Yes, there's something. Yeah. All right. Then I finished up with the lesson plan, and there was one more blue arrow right here while we're still trading this morning, but I missed that one. And then we get into the break, and there was a nice one. Actually, the outer bands are kind of flat on that. I probably wouldn't have done that. I would have done this, and it looks like it would have stopped me out. Knowing the slippage that I would have gotten, I would have stopped out, and I would have stopped out on that too. And I would have picked up most of it right there, gotten most of it back right there. Then that looks like it would have been another stop out for me. Could have gotten some of it back on that one. Yeah, the green arrow here put in a higher swing. If I had taken this right here, then I wouldn't have taken that. Now I could have taken this off the ribbon right here because the black is still in the green. But it didn't put in a higher swing, so I wouldn't have taken the follow-up trade there. The outer bands are kind of flat, so I probably wouldn't have taken that. If I did, it would have been profitable. Blue arrow there worked out well. And blue arrow right now, outer bands are pretty flat on this, so I wouldn't do that either. And that's what the NQ looks like today. All right, so we ended up with plus 58 on the NQ. I think we actually ended up plus 118, but I only wrote down 58. So that's what we're going with. All right. I'm going to jump into the live trading portion of this again right now. All right, something just happened here at 1300, but I'm going to jump into the live trading portion of this again. So I want to show everybody, if you have not taken a free trial with us, you go here to mytradingiq.com. Right here is where you sign up for the free trial, right? The big purple button, sign up for the free trial right there. There's no credit card required for the trial. Just sign up for it there. And it's going to bring you to this page. Yes, this page. On this page, all we ask for is your first name, last name, email, and phone number. Down here at the bottom, you can give us your machine ID or your username, or both. If you have the TradingView login ID or username, give us that. If you have it, give us your NinjaTrader machine ID if you have it, or give us both if you have them both. We'll set you up on both. If you're really going to chart from TradingView, you don't need to set up the charts with NinjaTrader. You know, that's really, you're just wasting time doing that. But if you're going to trade with NinjaTrader, then you know that's great, but you don't need to give us a machine ID. You can do that without our help. All right, so let's get into the trading then. Okay, just had this. I was just pointing at a minute ago that I said I wouldn't have taken because the outer bands were too flat. And then we had some green arrows right here that just gave some profit, but now they need to put in a higher swing before we'll trade them again. And over here, we just had a trade on the YM that needs to put in a higher swing. And the Russell did not have a trade. To have a trade, it's got to either bounce off the ribbon like this right here, or it's got to come out of the oversold like this right here also did. Come out of the oversold. All right. Now right here, it did both of the things here. It bounced off the ribbon, but it pulled back really deep into the ribbon. That's why the arrow is green. Okay. All right. And so we're waiting right now. It looks like here on the ES, we're going to have to pull back down and test the ribbon. All right, it hasn't hit the ribbon yet. It hasn't gotten into the oversold. So if it hits the ribbon and it does not get into the oversold and you get an up close, it's still a valid trade as long as it doesn't hit the black line in the ribbon. Okay, if it hits the black line in the ribbon, then it has to come out of the oversold. But if it doesn't hit the black line in the ribbon, then just bounce off the ribbon is okay to take, as long as you have a higher swing. All this stuff is displayed for you right here. If you go to trade rules, right? Let me slow down. If you go to trade rules, every trade has 3 parts: the entry, the risk management, and the exit. Okay, now all trading platforms that we use, you got to have these 2 things. Must come after a higher or lower swing pivot, and it must be in the trend, long-term trend. Okay, so with us, the long-term trend is defined by the outer bands. See, we're in the ribbon right now. So we've got a low here, 65.75, so you can buy 67.75 right now. If I can find my DOM, I will do that. Okay, now it's gone down a little further. Now it's going down a little further. Okay, so now you see how it's just hit the black line right here? Now it has to come out of the oversold to give us a trade. All right, it might not be a trade here, so I'm going to wait till it closes up. 64.50 up to 66.50 is what you'd be buying. So normally I would put a buy stop limit right here at 66.50, but because there's no guarantee it's gonna come out of the oversold, I'm gonna wait for it to close up, and if it does close up, then I'm gonna jump on the trade. Okay, I'm gonna wait for it to close up and pull out of the oversold. So it's got to pull out of the oversold to give us the green arrow. If it doesn't pull out of the oversold, then it's not a trade right here. Okay. So these are the ones you have to wait for. These ones right here, like this blue arrow, you don't have to wait for that. You can do it ahead of time. This right here, you gotta wait. See, it didn't come out of the oversold. So it's not a valid trade. Matter of fact, it went right into a no trade zone. So it's not a valid trade, and you're not gonna have a valid trade there for a few minutes probably. Okay, so over here, we just changed directions on the NQ. So that needs to come back up and hit the ribbon. And after a direction change, I like to bounce off the ribbon. Same thing's happening over here on the YM and the Russell. Okay, the Russell's in a no trade zone. The YM is at the ribbon right now. The outer bands are kind of tight, but if we go to down close right here on the YM, it would be a green arrow again. It's 32.03, subtract 8, it's gonna be down at 95. But I wanna wait and see it actually happen. Okay, I wanna see it pull out of the overbought. There it is. Now that is what is waiting for, okay? I just shorted right there at 97. That's a valid trade there on the YM. So I'm short at 97, I have a 10 tick stop on it. Anticipation is that it's gonna get down below this prior swing low. If we go here and look at the rules that I just showed you a minute ago, right? We've got the trade, the entry part done. So now I don't need to see the charts anymore. I know what we have to do next. We entered on the 7 tick range. It's got a 10 tick stop, 10 tick stop. Stop goes to break even after I get 4 ticks in profit. So it's going to hit this number right here. Right? It's going to hit this number right here. And then I can move the stop to break even. So that's what we're waiting for on this right now. Right? We can do the risk management right now, straight from here, following these rules, one step at a time. We did this right here. This is what we did. And the reason we entered that is this right here. That's why we entered. So when it hits 93, gotta go one more tick, one more. It's almost there. One more, there it is. Okay, so now I can hit the break even button, and it just took me out of break even. Okay, so I'm out of it at break even. But now once I got it to break even, then you have to go down here. All right, so then you got to look at the charts again. But this part of the risk management, once you get the trade on, this part of the risk management, you don't have to see the charts anymore. You just got to follow these rules. All right, follow those rules, whatever platform you're on. Now, 93 is what we're looking at, right? So it's going down to the prior swing low right now. If we go back to the chart, what we were looking for was for it to get down to this level right here, right? 83, 84, right there. 84 is what it was. So if you go back here to the rules, for the trade exit, look left for prior swing high or low. That was 84, right? So it's right there, just hit 84. Then learn how to read the DOM to find out where you should go after that. So that was part of today's lesson plan. All right, I'm not going to get into that right now. The DOM's not really giving up too much. 74 is where it's trying to get down to, but it wants to pull back up to 96 first. Right, and that was part of today's lesson plan. So I'll write that down on the chart for you. It wants to pull back up to 96. 96 right here is where it wants to pull back up to, and then it wants to go down to 74. Right there. That was out of today's lesson plan, how to read the DOM. Okay, that's what today's lesson plan was about. So if I drag it over and I put that there at 96 and drag this over and put it there at 74, that's what you should have anticipated out of the trade. You can anticipate out of the trade. And now the 96 has gone through it a little bit. We did put a lower swing in, so now you have another trade opportunity. All right, so 200 minus 8 is going to put you down at 92 is what you'd be selling right now. All right, from up here all the way down to 92 right now, unless it goes up higher, and it did, and now it's disqualifying the trade. Okay, so all of that stuff that I was just saying, you can hit cancel on now. All right. So I walked you right through that whole trade. Did you get all that, everybody? The Russell's got the same thing going on right here. Okay. So the Russell's got a double green arrow. The Russell's going into a weekly trading zone, which you really don't want to trade going into a zone, but in this case, you got enough room to get the stop to break even. So here, I'm going to lock in a couple of ticks on this one. Now it should go all the way down here to the prior swing low at 82.5. That's way down here, 82.5. That's where it should go. Okay. Now I doubt it's going to go down there all at once, but it did make the pullback all at once. So there's a chance it'll go all the way down there. Now I'm just going to take that one off and put this one at 82.5. Right, that'd be 27 ticks, I think, something like that. 26 ticks. Okay, so I'm going to lock in 15 now. And we're looking for it to get down here to the prior swing low. You all understand that, right? So I got 15 locked in, and I'm looking to get 26 at the prior swing low. Okay, so I'm going to let this play out. Now, we got out with the 15. Now, that all makes sense to you, right? You got the opportunity for the entry right here, going back to the rules. This was these rules right here. These are the rules that I followed right here. The green arrow will only appear when price is bouncing off the ribbon, otherwise the arrow will be black. The short trade, the black line in the ribbon must be on top and in the red or silver, and the lead black line in the slingshot must cross below the overbought level. Right? Okay, that's for the short trade. Now let's go back here and look at it. This is what happened. The black line was in the silver. So we'll back up, the black line was in the silver, and this came out of the overbought. You got two green arrows because it came out of the overbought twice. Now, following the rules, again, following the rules in here, the risk management rules, it's a 7-tick range, has a 10-tick stop. So on the pullback here, this deep pullback right here, it only pulled back 7 ticks. So we had a 10-tick stop. The stop would have been right up here, and then it started moving down. Now going into the weekly trading zone, I don't like to trade if it's close to the zone or within the zone. You got to have enough room to get your stop to break even between the entry and the zone. And in this case, we did, so I did. And then I was looking for it to get down here, which it didn't do. I was able to trail my stop to plus 15 ticks, and it took me out at 15 ticks. And I'm glad I took that right now. Does that make sense to everybody? It's the same thing again and again and again and again and again. Now, sometimes when I get into partners meetings, not partners meetings, when I get into meetings with people, and I'll discuss this tonight if anybody asks about it. When I look at the pullbacks, looking at the green arrows and looking at the blue arrows and the black arrows and whatnot, when you look at the pullbacks, if it pulls back too deep, you know, you might say, well, what's too deep? Well, too deep is pulling back beyond the prior swing that was in the trade. Okay, too deep is pulling back. Let me find an example for you. This is beyond that. That's too deep. Right. This one right here was, well, it wasn't too deep. I guess that was okay. This right here was beyond that. So I would have skipped, well, I would have skipped that anyway because this didn't put in a lower swing. this right here, well, when it's following a blue arrow, it doesn't really count. This right here, you can't get it down below that one. That was okay. I'm looking for a green arrow that failed. Let me find a green arrow that failed. Here's one. Okay, so this one here was down below this swing low right here. That's the kind you don't want to take. Okay, I'll go over this in the partners meeting tonight if you want me to. This right here was below that swing low right there. Okay, this right here was below that swing low right there. I know it ended up going up, but it would have stopped out first. This pullback right here was above that one right there. You see what I'm getting at? Anyway, I'll go over that in more detail tonight. You guys want to. This needs to put in a lower swing for us to trade again in this market on the Russell. Okay, and over here on the YM, we haven't gotten down to this level yet. It's going to get down to that level eventually, but it hasn't gotten there yet. It did kind of go back and hover at this level, so it is what it is right there. Now, we have 13 minutes left in here, so hopefully we'll get another trade. I don't know if we will. There was one thing I wanted to show you guys. Yesterday afternoon, you may remember, let's see, I made a picture of it. 425, that's today. 424, yesterday. We were looking at NVIDIA on the bigger time frame here, out here. We're looking at NVIDIA. Also, I put a change in last night to eliminate some of the things that happen in CHOP with the TV trades. So it will eliminate some things. Okay. Usually the things where you get the back and forth things. If you have longs and shorts on, eliminate that. Now let's look at NVIDIA. That's what I want to show you. NVIDIA. There it is. Okay, I want to look at that on a 30-minute. So yesterday, when it was here, and I showed you the options on that right here, right? 424. If you look at the prices on these yesterday when it was right there, and that was when it had already, these options, these are puts, and they had already gone up significantly yesterday. And I said, because we got this arrow here yesterday, yesterday was in this half an hour right here that we were talking yesterday. I guess it was right in this half an hour yesterday, between 1 and 1:30, right in here. So these are what the puts look like yesterday. And I said, I know they've already gone up a lot, but they're still going to have more value. If it does go down like it should go down. And then let's bring up the next picture here. This one, I think, is today. So this is what it looked like this morning after it moved down some more yesterday. You're looking at the 90s to the 90s right here. You put the 90s right next to each other. There they are. Oops, I didn't mean that. I'm trying to put the 90s right next to each other on the same level. Let's move that down. And here we'll put the 90s right there. Okay, so now the 90s are on the same level. So the 90s, yesterday when I said we're 620, this morning 1140. The 95s are 8, they went up to 1315. The 800s were 940, they went up to 16. The 805s were 1140, they went up to 1870. And on down. You can just see right here as it kept going on. The reason I did that, and I wanted to show you this. I mean, today, when it's gone up right now, all those options are, they're way down because it's gone up. But you had the opportunity. That's the way the options work. With options, you can't be asleep at the wheel. You have to have some profit target in mind. You can put a profit target on there where we want to take profit, like maybe 50%, 100%, something like that, a 75% gain. But to get you out of the thing, so you're done. You don't have to worry about when it jumps back like this, because right now when it jumped back like this, these are the same numbers. And now that they're out of the money, you're right back here. Let's go back. These are from this morning, how much they're down from this morning. You can see right here how much they're down from this morning, and they're right back to where they were yesterday. If we bring that other one up, this one I think was yesterday, right? That's 25. This is 24. This was yesterday. So they're right back to where they were yesterday. If you put the 790s right on the 790 level. Okay. 668 yesterday, 620 yesterday. It's still a little bit higher today, but 795s from 8 up to 867 now. The 800s from 940, but this one went down some. The 805s, 1140 to 1150. The 810s, the 810s, they're a little bit higher right now. But the real opportunity was this morning when the market opened up. You had a chance this morning to take some great profit on these things. And I wanted to point out that's another way that you can use the TV trades. If you, I was talking about Exxon yesterday. You can do the same thing with Exxon. You can do it with any kind of stock. The stocks that move quickly, like Nvidia, that's been jumping around a lot lately, or Mr. If you were to do MSTR, I don't know what the options look like on this, but let's go look. MSTR. Let's see, we'll go to options on it and see what it looks like. Okay, what's Mr. doing here in the okay, so Mr.'s had a put yesterday at 10 o'clock, or a down arrow where you would have been thinking buy a put. So we'll see how much it went up. I don't know, let's just look at puts in here. We'll look at just puts, and we'll see as we get down here to the money. All right, a lot of them went down today, but I don't know from day to day how much they would have gone up or down. I don't know what they looked like yesterday, but you see there's just a ton of opportunity in here. If you want to trade options, if you don't have $1,000, or if you want to trade 100 shares of this, you need a whole bunch of money to trade 100 shares of that, right? But if you don't want to make money that way, you can do it with options. And when I gave this down arrow yesterday, this is a 30-minute. I gave the down arrow here on the 30-minute yesterday. If you bought some puts right then, those puts would be worth, at one point, they would have been worth a ton more. I'd say a good, easy 50% more. And it's just another way you can take advantage of using the TV trades, right? Any one of these red arrows right here would give you a great opportunity. Okay, this blue arrow right here would give you a great opportunity with calls. Okay, I just wanted to point that out for you so you can see using the TV trades. There are a bunch of different ways that you can use it. And I'm going to go back here right now. Get back into this and see if I have any more trades going on. All right, so we got out of the weekly trading zone here. We went through that prior swing low on the Russell. We're through the prior swing low on the Russell. We're through, everything right now is really tanking. Over here, we had a nice green arrow here that gave it a decent short. We had a black arrow that was too close to the swing low. This black arrow was not too close. You could have taken that black arrow. But now we're back in the ribbon, and let's see if we get an opportunity to trade the NQ right now. We need a down close on the NQ, and it's got a high of 76.50, so you'd be selling 72.50 right now on that. Okay, selling 76.75. No, it's not going to be a trade. Cancel. All right. I feel like here, I want to go back out here and see if Nathan had said anything else. Nothing else in there. Okay. This ended up being no trade here because the black got into the green. It pulled back too deep. So it lets you know when it's too deep of a pullback.
He wants to know, what is the theme of today's training?
The theme of today's training.
Exactly.
The theme is to
I explained it to him.
Take profit when you have an opportunity. That's the theme. The theme of every day's trading. We don't go in with today.
I explained to him that if he took the trial, he would actually be able to attend the daily training session. 2 hours every trading day.
Yes.
For 5 days with no credit card required.
Right. And this is how you do that. You go here to mytradingiq.com, click on the purple button. It's not a complicated thing. It's real easy. It brings you to this page. All you have to give us is your first name, your last name, your email, your phone number. These are all little drop-down boxes. Just answer them truthfully. Then down here, we can see you already have a you already have a TradingView ID right here. Just put in your TradingView ID and we'll enable the indicator set for you. Once you have the indicator set enabled, then you get into the room in the morning and we'll take trades based on whatever the market has given us. And if it's going down, we'll take shorts. If it's going up, we'll take longs. If it's going sideways, we'll sit on the sideline. Right? And we have a lesson plan that we cover 4 out of 5 days. We're in day 4 of it today. This is the lesson plan for today. Starts out with day 1, just to explain basically what you're looking at on the charts, different bar types, range charts, stuff like that. Then day 2, we get into a little more detail about the actual indicators. Then day 3, we get into more detail about the indicators and give you a little bit of a bonus for sticking it out to day 3, just stuff that you can take with you after the trial, even if you don't stay with us. In day 4 today, I give you even more valuable stuff that you can take with you, even if you don't stick with us. And we finish off by showing you the different DOMs, how to use the different DOMs, and the weekly trading zones. And then tomorrow is just trading and answering questions. That's how it works, right? So the theme is always the same. We just want to make money. The lesson plan, it varies from day 1 through day 4. And then day 5, we just trade and answer questions. Okay. So that is how we do things. We are just in there to make money. Okay. All right. So now it's 1:28. We're just about wrapping it up here.
You might want to answer Ken's question. He wants to know about the options theta decay factor.
Ken has to know, how long does the option decay factor? How does the option theta decay factor? Okay, so you're talking about the time value. Well, it depends what you're doing. It depends what you're doing. I mean, what I was doing yesterday, I was doing options that expired 2 days. They expire actually tomorrow. What I was looking at yesterday, and the same options today. So it doesn't play in very much at all. You're not paying much for time at all in that, Ken. Because if you look at, I mean, I know you don't see the whole thing in the picture. Let me bring the pictures back up. Okay, I'll bring the pictures back up, and then I'll show you in here the options that I was looking at. They're April 26th options, right? So they're tomorrow's expiration. So you're not paying much for time at all. And these options were the same thing. So the question for everybody else, how does the theta decay factor in? So theta decay is what he's talking about, time value. How does that factor in? Because with options, it factors in a lot. Now, I'm going to throw something else at you here. If you're going to buy an option that you're going to hold for a while, you might want to buy a micro future instead, because you don't have the time value. You don't have to worry about the time value with the micro future, right? You have to hold it overnight. You got to do all that stuff. But you probably won't get the same bang for the buck, but you get something, but you don't have to worry about the time. You're trading micros, okay? You also don't have, you have unlimited risk when you're trading any futures. You have unlimited risk with with an options contract. It's just whatever you pay for it. That's your maximum risk. Those are the differences, really. But since you seem concerned about the time, and that is a fair concern. Yeah, I was looking at stuff that was 2 days out. Actually, they're all tomorrow right now. Okay, these are all the 26. These are the 26. These are the 26, and the other one that I was looking at for the MicroStrategy was also the 26th. Okay, so the time doesn't play into it much at all. Just know that you have to make money now. And when you're looking at these things from not that one, sorry, I'm going here to 6. You're looking at this stuff on the TV trades. This is right now. It's a 30-minute chart. So this is right now. You're not looking at a daily chart. Now, if you're looking at a daily chart, then the last trade that it gave was back here on MicroStrategy. It's back here in February. In that case, you might buy something that's a month out. If you're looking at a daily chart, so you're going to pay a lot for the time on that. But you might buy something that's a month out, and you'd have made many multiples on that. But you got to pay money for the time, and you're going to lose value with the time as it goes through this whole month right here, these 2 months that it's gone through. You'll lose a lot of value in the time. Okay. But what I was talking about on a 30-minute, you're talking about options that expire, 1 or 2 days from now. You're not talking about stuff that you can pay a lot of time on. Okay. Do I only focus on those? No, I don't only focus on those. A lot of times I'll do stuff that's a week out. It's up to you.
Mostly we focus on futures.
Yeah. I mean, we focus on futures primarily. And this right here is an equity. So when you talk about equities, it's different. The stuff that I do in the room in the morning is all futures. But when you're talking about TV trades, it was designed for equities to begin with. It works great on futures too, but it was designed for equities to begin with. And this, I was just showing you this part of it. So you can see that there's more to it than just, getting in there and trying to day trade equities. Or trade equities that if you go off a 30-minute and you go to like an hourly, you get into swing trades where you might hold something for a few days, like this one right here. You'd hold for a week. Okay, Ken, I didn't see a question. All your questions, yeah. Do you have any more? I'm still here and talking, so you got my attention. If you have more questions, right now is the time. I mean, I run over my time that I normally spend, but I'll give you a couple more minutes if you have more questions. Again, I'm going to show you how to take the free trial with us, okay? Go here to mytradingiq.com, click on the purple button right here to sign up for the free trial, all right? Starts 9:15 to 11:30 in the morning every day. There is no credit card required for that trial. Okay. This is TV trades. It's target view trades. Okay. If you sign up for this trial, I'll let you have a trial with that as well. Okay. This is, if you sign up for this trial here on mytradingiq.com, I'll let you have a trial with target view trades as well. All right. All right. And that is it. With that, I will wrap it up and send it back out to fabulous Phoenix, Arizona. Okay. Again, go out to mytradingiq.com to sign up for the trial. Right. There's no credit card required for the trial.
Okay, recap of the morning session.
Today it took 10 minutes and 6 trades to get to $2,320.
Good job.
Thank you. Thank you.
All right, guys, pick up where we left off with crude. Here's where we opened last night, right at the weekly trading zone. Made an initial run at the long target. Didn't quite get there, but the market provided more than enough to get your goal for the day. In fact, even just this candle here. Opened at 83.10, ran up $150 per contract traded. That got one candle right there. Now, $150 might not sound like a lot, but if you've earned the right to trade 10 contracts, it's $1,500. So, yeah, it's not a bad living. Whenever the market runs into resistance, as it did here, we'll go look for support. When price drops to the weekly trading zone, we expect support until proven otherwise. So this support sends us to this resistance right here, pretty much to the tick. That resistance sends us back to looking for support, which we find at the short target below. We actually shoot through it all the way down. Actually, that right there, the low of that candle. If you look left, Thursday, Wednesday, Tuesday, we had a bullish cross right there. And that is the low of that candle right there. So that support sent the market back to resistance. Resistance sends us back to support. Support sends us back to resistance. And it appears we have overcome BBC. Pullback holds more often than not. Like here and here and here and here and here. and here. But eventually price will trade through the BBC. So if you consider going long at 83 bucks, take profit at 83.10 because there's a high probability you're going to run into resistance at about 83.14, 83.15. Okay, get above 83.15, then from 83.20 to 83.30, would offer another 10 ticks. Only takes 10 ticks to get your goal for the day. That's $100 per contract. Now, $100 per contract traded, whether it's the ES or crude or gold or whatever. Doesn't sound like a lot, and it isn't. But over time, you add additional contracts with profit you earned in the market. 2420 blueprint will start you out in your demo account, where you need to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint will give you the green light to go live with one contract. Now your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. Now the big difference between the first and second contract is the first contract, that was funded with your startup capital. The second contract, that's funded with profit you earned in the market. Going forward, Blueprint's going to notify you when it's time to add contract number 3, number 4, number 5, number 10, all the way up to number 20. And each time you add a contract, you're going to earn an additional $100 a day. So if with one contract you're making $100 a day, with 2 contracts you're making $200 a day, with 5 contracts you're making $500 a day, with 10 contracts you're making $1,000 a day. That part of it is all simply a function of math. But first, before you start chasing moonbeams and rainbows, you got to learn how to consistently take $100 per contract per day out of the market. Again, consistently. Day after day after day after day. Now, some days you'll do it with your first trade. God forbid you should then the following day get it with your first trade. And I really feel sorry for you if you get your goal for the day on the third day with the first trade. Because now you have built, unwittingly, unrealistic expectations. Now, your lizard brain is going to expect to get your goal for the day every day on the first trade. And I'm here to tell you that's not going to happen. So learn how to get your goal for the day, whether it takes 1 trade or 3 trades or 5 trades, all the way up to 10 trades. If it takes you more than 10 trades to get your goal for the day, then you need to book a mentoring session. Book a mentoring session, well, you need to be a member, okay? But it's all laid out, time tested, battle tested. While you're in your demo account, putting together those 10 days so that you can go live with real money, Blueprint's going to walk you through writing your business plan and your trading plan. 9 out of 10 new traders don't even know they need a business plan or a trading plan or what they even are. Well, here's some news. You need both. You need to understand not only what they are, but you need to learn how to create them. And that's what the Blueprint will do. Now keep in mind, our approach is teaching you how to trade. Once you know how to trade, you can trade anything, anywhere, anytime. And once you know how to trade, nobody can ever take that away from you. And I highly doubt that anybody else will ever pull the wool over your eyes with one of their shiny objects. So, anyway, here's price trying to make that run. First, we expect resistance here. And what do we got for resistance here? 83.30, 83.33, 83.35. On gold. Here's where we opened last night. We pulled up to the BBC. Pull back holds more often than not. And what did it do? Sent us down to the target and through the target. Got us down to this low area right here. There. That support then sends us looking for resistance. Initially, it's at the BBC. This time, as opposed to the pullback holding, this time we trade through. We know eventually that will happen. And then off we go, up to the long target. Resistance sends us back to the zone, support. But this time we trade through support. And this low here, it's right here. Support, again, sends us looking for resistance. You scroll back on your chart far enough, you'll find out where this resistance came from on gold. Silver. Here's where we opened, pulled up to the BBC, dropped to the short target. Got above the BBC, got a leg, retracement, price always reverts to the mean, and then a leg that took us up to and through the target. Then we retraced that entire move all the way back down. This area here. Support sends us to resistance. We took out that double top right there, those highs. By how much? By a little bit. And what do we say about a little bit? Be very, very careful. Whenever the market puts in a new high or new low, by a little bit, relative to whatever time frame you're looking at, whether it's a 1 minute or a monthly, you have to be very, very suspicious. Make price prove itself. And the euro, we opened above the BBC and just ran right on up the target, traded through the zone, rolled over. That news that came out today sent us all the way back down to the target and the zone below. When price drops to a zone, we expect support until proven otherwise. Just like yesterday. Once the zones are published, they're carved in stone for the entire week. They do not change in any way whatsoever. So from this support, we're now looking for resistance. This high right here. Like a pretty good spot to find some. You can overcome that. And you look left. See what other areas of potential resistance there are. And there's the highest weekly trading zone for this week. So, today's Thursday. We only have one trading day left. Here's the ES. Support at red and falling because it was directly below price. We've now pushed above potential resistance at the step line. just above the 24% fib. Got potential resistance at the 50% extension. At the high of yesterday, was 51.2875. Right now, the BBC is at 51.39. Looks like price wants to attempt to do what it initially started out to do. So see, we had a leg and a retracement, and now we're getting the remainder of the leg. Okay. Price always reverts to the mean. Came real close and collapsed. Now it's trying to complete what it set out to do. And if it makes it here, what we logically expect is a leg to the downside. We'll see what happens when we get there. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI. Send an email to support@cfrn.net. Or at MyTradingIQ, you could just click the Buy Now button. 9 out of 10 new traders fail. Why? Because they don't have a teacher. And if you want to be a lawyer or a doctor or any other career path you can think of, your first thoughts will be, okay, what school do I attend? Can I get in there? You know, is it a trade school? Is it education of higher learning? Blah, blah. Okay. But with trading, people see this as a shortcut. Oh man, maybe I don't have to go to school for 10 years. I don't really want to be a doctor anyway. You're getting nauseous at the sight of blood. So this website just says I can just put some money in an account and follow whatever they tell me, and or use the indicators they sell me, and bing, bang, boom. I'm making money like a rock star. Ha! And I didn't have to go to school. How's that working? Well, we put a lot of emphasis on teaching with a living, breathing teacher every trading day, 2 hours. It's an interactive environment. Putting on, taking off trades live in real time. While you trade along in your demo account till you qualify to go live, and you're asking every question that pops into your head. Never think that your question interrupts what's going on. Your question is the purpose of what's going on. And whatever you ask has been asked 100 times before, if not 1,000. And you'll get the same answer everybody who came before you asked. That's pretty simple. As a passport holder, you have access to one-on-one private mentoring, no additional charge. Strategy you learn, the indicators you own as a passport holder, are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETFs. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. Never-ending cycle. As a passport holder, you'll get those Logic 247 alerts that come out around the clock. You get the Concierge Trade Alert report each night when it's published. And you'll be able to attend the members-only workshop tonight at 8 p.m. Eastern. Everything a trader needs, all under one roof. One low price. MyTradingIQ.com. Just hit the Buy Now button. Let's wrap it up with our good word for the day. God is your provider. Psalm 23:5. You preparest a table before me. Of course, we know it goes on to say, in the presence of mine enemy. So, next time you sit down at your table to eat a delicious meal, stop and think about all the people it took to make it possible. A farmer grew it or raised it. A food processing company prepared and packaged it. A transport company shipped it. A grocery store sold it. Then someone paid the price to buy it, cook it, and set it before you to eat. Now, I should add that at the beginning I said a farmer grew it or raised it. Well, in today's world, it could be a lab tech who grew a culture in a petri dish, and now they're calling it a steak at the grocery store. Be very careful eating that stuff. I'm serious. There are many links in this chain, from the farm to the table. But the first link is God. He made the soil. He made the seeds. And He made the livestock. Without Him, you would go hungry. That's why it's proper to say grace or offer thanks to Him each time you come to your dining table. When someone sets food for your enjoyment and nourishment in front of you, common courtesy should require that you respond by saying, "Thank you." Here's a memo from heaven. Everything you have came from me. Signed, God. Go to James 1:17 and you'll get it. Perhaps you're thinking, but I worked hard for what I have. Well, then you're to be commended for your great work ethic and all your effort. But that's not the end of the story. Here is the rest of it. Command those who are rich in this present age not to be haughty, not to trust in uncertain riches, but in the living God, who gives us richly all things to enjoy. Let them do good, that they be rich in good works, ready to give, willing to share. 1 Timothy chapter 6. When God says be ready to give, willing to share, He is simply saying, just as I have been the provider of all your blessings, now go out and share those blessings with others. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, Call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.